Okay guys, welcome to Forex Basics for Beginners with MouaFX 2024 partnership with the Marios. So today I'll be explaining what Forex is and why is Forex trading important, how does Forex works, exchange rate. I'll be explaining all that today. So most of you already know what Forex trading is, which is the short form of foreign exchange. Now, Forex trading is the buying and selling of currency pairs. Now, when it comes to currency pairs are merge of two currencies, are the merges of what two currencies. Now, we trade Forex globally using broker. You trade your Forex using broker through online, and also Forex can be done through the internet or through your bank. Now, most of us make use of the internet to trade Forex because of the conveniences. Why sometimes if you are traveling out of the world, out of the country to another country, you have to exchange your own country currency to the country currency you are going to. So you'll be able to spend the funds you want to spend. Now, in that scenario of you exchanging funds, it's also part of Forex trading. It's also part of an exchange. You've done an exchange from your own country currency to another country currency. So why is Forex trading important? Now, Forex trading is important due to so many reasons, but I'll only list two here. Now, one of the main reasons is a very huge financial market, which make over $6 trillion trade every day, and it's always open 24 hours, 5 days a week, which is Monday to Friday. Saturday, Sunday is not included. Now, you can trade Forex conveniently at your home, in your toilet, in your kitchen, in your office, anywhere you are in the world. You can trade Forex as long as there's access to the internet and you have system, or you have your phone and you have access to internet. You can trade Forex wherever you are in the world. So how does Forex work? Like I told you in my definition, Forex is the trading of what? Is the buying and selling of currency pairs. So how does Forex work? Forex work with currency pairs. Now, without the help of currency pairs, we won't be able to trade Forex. And what are these currency pairs? Currency pairs are currencies of different countries which are merged together to become one. For example, right here we have Euro USD. Euro USD is an example of currency pair. What does this mean? This Euro here is what? Europe. USD here is what? USA. Now, merging USA and Europe together, we have what? Euro USD, which means pairs. So what does this tell you? It means that you want to buy what? USD at the price of what? 1 euro, or you want to sell USD at the price of 1 euro, for example, which I'm giving now. Now, if the Euro USD exchange rate is 1.10, it means 1 euro equals to what? 1.10 USD. I get my point now. Now, if the rate of USD at that time is 1.5, it will be equivalent to what? 1 euro equals to what? 1.5. Let me show you other examples. Now, look at this USD France. Now, USD France. They are trying to tell you that the price of what? 0.8 USD, 0.8 France is equivalent to what? 1 USD. That is what this means. 0.8 France is equivalent to what? 1 USD. So if you look at Bitcoin to US dollar, you cannot trade Bitcoin to US dollar as a pair. It's not a currency pair. This is crypto. Crypto is not currency yet. I don't know if they have merged it to currency, but to me, crypto is just Bitcoin and Ethereum, all those ones that are coin. They are not yet currency. So that is why we have it at this rate of 100,000 Bitcoin make what? And many USD. You can calculate that yourself. There's no way I can calculate this. Now they say 1 Bitcoin is what? Okay, sorry. 100,188.68 USD make one Bitcoin. Are you seeing that now? 100,188.68 make one Bitcoin. Same thing with what? With France. 0.88 make one USD. Same thing with USD. 1.04 make one euro. Are you seeing that now? So this, I'm still going to explain others to you later on again for more understanding. But just know that these things are what are your peers. These are your peers. All these are your peers. Your crypto to currency, your currency to crypto, your currency to Meta, your currency to whatever merges it is. But they are all peers. They are all peers, and peers are also called quotes. Your Meta 4, Meta 5 account, you'll be seeing this a quote. This is a quote. This quote also defines what currency pairs is. It's the same thing with currency pairs. So whenever you are seeing all this thing, your Meta 5 trading platform, you don't know what they are. They are called currency pairs. It's the end of these pairs we use to trade Forex. Without the help of these pairs, we won't be able to trade Forex. So let's move to the next one. How does Forex works? I've explained that Forex works with the help of currency pairs, which you are trading pairs. So we have different kind of pairs. We have different kind of pairs and different type of pairs. We have the meta pairs, we have the commodity pairs, we have the indices pairs, we have the crypto pairs, and we have the currency pairs. So we have different kind of pairs. Now when it comes to the exchange rate determines the demand or the commodity or whatsoever is moving the market at that point will determine the exchange rate of the currency. Now the exchange rate of USD to Naira now, you all know is 1.7. For now, I don't know if it has entered 1.7, but let's just say within the range of 1.7. That's the exchange rate if you want to buy USD. If you want to sell USD, same thing with the exchange rate. You have to know the exchange rate of that currency that you want to trade at that particular time. Now, who trade Forex? The bankers, the government, the large companies. Those are the main foundation of people that trade Forex before the retailers comes in. And we are the retailers, you are the retailers. So we that trade with the help of brokers are the retailers. Those that don't trade with the help of brokers are the big players in the Forex market. So we use brokers to trade. So we are the retailers. So what is this broker itself? Broker is the one that what helps you to trade your money. Without the help of broker, you won't be able to trade, because you have to have a kind of sum of amount before you can stake a trade. And we have what we call lot size, which is 0.001 is the smallest lot size, which they call nano lot size. Now the nano lot size, which is 0.001, I mean, you have to have at least $100 before you can stake that trade. And if you only have $1,000 in your account, that means if you lose that funds, the $100 will be taken away from your account, and you'll be able to trade that account 10 times if you are losing your funds. So if you lose $100 10 times, you've lost your own 1,000 naira. That's all. $1,000 I mean. Now if you're trading with 0.01, you have to have at least $1,000 before you can stake that trade. Now, due to the fact that those things are too expensive, nobody will want to just take a trade with $1,000 when that is all he has. If 1,000 is all you have, you'll be able to take that trade, because you will likely want to trade 0.01. Trading 0.01 at that time, you lose your funds, because 0.01 is equivalent to $1,000. That is the value of 0.01. So you have at least $1,000, and if it is $1,000 you have a loan, that means you are giving that trade 50-50. That okay, if this $1,000, if I lose it, I lose it. If I win it, I win it. At that time, those are how they trade at that time. Now, broker make it easy for us with the help of leverage. You can have $1,000 in your account, and you can trade that $1,000 as many as it gives you, depending on your risk management. If you are using 0.01 on $1,000 with the help of leverage, you can trade that account like 50 to 100 times, even more than, and you won't have that fear of losing using proper risk management. Now, learning Forex is easy. All you need is your computer, internet, and trading account. And you can make profit, you can make loss, and you can trade anytime, anywhere. Nobody commands you, nobody controls you. That's just one of the big picture of trading Forex. Now, that's all for this lecture. Now, let's move to the next one. Now, we have how Forex works. As I've explained before, how Forex works, just like I said, Forex works with the help of currency pairs. And now those currency pairs are divided into two. We have the base currency, we have the quote currency. Now, the base currency is the highest currency before the quote currency. Now, euro is higher than USD, so that is why it comes first. Now, USD is higher than Naira, that is why it comes first. So the base currency is the first currency pair, while the quote currency is the second currency pair. Now, let's use this for example again. Now, this is Euro USD. Euro comes first before USD. This is the what? This is the base currency, and this is the quote currency. Euro comes first before what? USD. This is the base currency, and this is the what? Quote currency. USD comes first before France. This is the base currency, and this is the quote currency. Bitcoin comes before US dollar because Bitcoin is far greater than US dollar. One Bitcoin is equivalent to $100,000. You know what that is? That is the value of one Bitcoin. So it's far greater than US dollar. Now, couple Naira inside. Put your Naira for the value of that Bitcoin. You should know what we need to demolish your Naira for you. So that is Bitcoin. This one is Bitcoin Cash. I don't need to explain that for you now. It's those that do crypto understand what this. So let's move. So I'm just going to be using these three as an example. So you should know, if you press this plus icon, it will show you others. I'm not connected to the internet, I think. Okay, yeah, it's working. We have Canadian dollar to Swiss francs. We have Canadian dollar to Japan. All these are pairs. We have Forex minor, we have futures, energies, indices, majors. They are all pairs. Spot energy, spot indices, all these are all pairs. Stocks, this is stocks trade. We have different kind of pairs. If we have United Kingdom stock, this is it here. You can trade as they are all pairs. You can trade stocks. So now, just have it in mind that they are all pairs. You don't need to complicate yourself. Just have it in mind they are all pairs. You are not writing an exam on it. you are here to make profit on your Forex account, not to go and be doing some exams. So this is Euro USD, this is USD France, and this is Bitcoin. All these are pairs. And if you look at this Forex major, the Canadian dollar comes first before the Swiss francs. This is your base, this is your quote. Canadian dollar comes before Japan yen. This is your base, this is your quote. Swiss francs come before Japan yen. This is your base, this is your quote. Euro come before Canadian dollar. This is your base, this is your quote. Then Euro come before Swiss francs. This is your base, and this is your quote. I don't know if you understand. The first currency pair is always the base. The second currency pair is the quote. So the quote is always smaller than the base. The base is always bigger than the quote. Just have that in mind. Now we have what we call bid and ask. Bid price, this is the price at which your broker will buy the currency pair from you, and the ask price is the price at which your broker will sell the currency pairs for you. Now, what are these bid and ask? Which I just explain now. Sorry for that. Okay, I have the picture here. Now, if you look at this now, I have so many pairs here now. All these pairs, the first numbers that they are on blue, the first numbers before the second numbers, which is this is the bid, this is the ask price. I mean, the ask price is the selling price, the bid price is the buying price. Now look at this now. For example, if you want to buy dollar, they'll be asking you, what is your bid price? Your bid price of dollar is 1,700 naira to buy $1. That is the bid price. So that is the buying price. The bid is also your buying. The ask is your selling. What is the selling price of dollar to naira? You can check it on your Google. What is the bid price of dollar to naira. You can check it to your Google. So whenever they ask you that, okay, check the ask price of this so currency, they are telling you to check the selling price of this so currency. Check the bid price of this so currency, they are telling you to check the sell and the buying price of this so currency. So your bid and ask is your sell and buy. Ask is sell, bid is buy. So it's just like another kind of language to it. So you shouldn't complicate yourself. If you don't want to use bid and ask, you can use sell and buy. That's what is here. Sell. Let me zoom the picture. This is sell and this is buy. So you can, if you cannot use the term bid or ask, you can use sell and buy. You don't need to cram anything. Your ask is the sell, the bid is the buy. So what we now, there's something we call spread, which your broker charge you, because your broker make money with your spread. At least they have to make something now. Your broker make money with your spread. So the spread is the difference between your ask and the bid price. The spread is the difference between your selling price and the buying price. If you want to know the difference, what they mean by the difference, they means that you should minus your ask price from your buying price. It will give you the spread. Minus your ask price, this value you are seeing here now, minus this value with this value, it will give you the spread. You can see the distance between this green line. Let me zoom it again. See this green line here right now. This is the green line. This green line is the ask price. The green line depends on the color your, okay, it's same color in everywhere, Meta 4, Meta 5, but some people can change the color. You can decide to change the color, but the default color is always green and it's always red. So this red here, this green here is the what? Is the ask price, is the selling price. This red here is the bid price. So the difference between this one and this one is this gap here. Is the gap you are seeing here. So that gap, when you minus this one here, this one here and this one here, when you minus the two of them, it will give you what is inside this gap here. So this is the gap. This is what we call spread that your broker will charge you. That's why when you place a trade first, what do you see? You see minus first before you start seeing your profit. So that minus is what your broker has charged you. Some broker does not charge spread, some broker charge commission. So that's why whenever you want to buy, whenever you want to choose a broker, always check if the spread is high. If their spread is not high, go for it. Like if you look at this one now, maybe for example now the red should be in this level here. The red should be in this level here, and the green should be in this level here, my brother. Run from that kind of broker, because the gap here, it will be way too much. That means the spread here will be too much. If you are trading with 0.01, you can start losing $100 instantly first before you even start making profits. So that kind of spread is too much, and before you can make a tangible profit, it will take time. Because what that means is that if I'm buying, the buying will be activated at this red line. That's where the buy will be activated. For me to start making profit, this green line has to pass that place that the buy activates my trade, which is this line. I mean, this green has to pass this line here before I can start making profit. If the green did not pass it, I won't make profit. Now, determine the kind of time it takes to pass, the amount of pips it takes to pass. You could have made something tangible now. So that is why the spread, run from broker that charge high spread. Now, when we talk about pips, most of you could have been hearing pips. What is pips? Which is PIP, pips. There's nothing to be complicated here. Just now, the pips is the value of the currency pair, the numbers of the currency pairs. With the numbers from here, 566501, they are pips. If this 5 enter 6, it will be like this 5 that is raised to power here now is pipette. It's called pipette. But if you are looking at it here, you can say it is not raised to power. If you look at it here now, it is 1.0566689. It's not raised to power here. If you look at it, it's not raised to power here. So this place now, you can just count it as your pips. You don't need the pipette not to confuse your brain. Same thing. Each value this one increased to, if it is increased by 1, that 1 is your pip. For example now, as it is in 9 now, if you add 1 this 1.05689 plus 1, it will be what? 1.05689, right? And this 9 will change to 0. That movement now is 1 pip. Now if it is now 1.05691, no, this 0 that was here before has turned to 1. Okay, let me do it this way. That's their features. I haven't subscribed yet. Okay, let's do it this way. I just want you to understand better. That's why I want to do all this. I just want you to understand what pips is. Sorry for that. I thought I saw what I was looking for now. Now, for example, we have. I thought I might my pen. Sorry for that. I didn't highlight the pen. Okay. Since that's how I can do it. Now we have 1 point. Let me do my point here. 1 point. Sorry for that. 1.0 0 0 0. Now this is 1.00. Let's say this is the value of that Euro USD now. Now this 1 point, if this one changed to 1, if this 0 back here changed to 1, it will be 1.00001. That is 1 pip movement. If it change to 2, it will be 1.00002. That is 2 pip movement. If it change to 3, same thing, 3 pip movement. Same 4, 5, 6, 7, 8, 9, 9 pip movement. If that 9, now if you now add 1 to that 9, you know this place will now be 1. There will now be 0. How many pip movement now? 10 pip movement. If this 0 here add 1, 11 pip movement. Continuously like that till if you reach 5 here, how many? 500 pip movement. If you reach 6 here, how many? 600 pip movement. Till this one, 1000 pip movement, 2000 pip movement. Hope you understand what pip is. That is how far I can explain pip. You just have to know is the movement of this, the counting of this value. If it is adding by 1, it will be giving you your pip. If it is reducing by 1, it will be giving you the same value of your pip. Reducing or increasing, you'll be counting it as save pip movement. If it is -1, you say -1000 pip movement, -2000 pip movement. If it is +1000 pip movement, +1 pip movement, +2 pip movement, +3 pip movement, -1 pip movement, -2 pip movement, -6 pip movement. Same thing. That's how you count the pip value of this one or this one. If you are buying, you'll be counting this pip. If you are selling, you'll be counting this pip. That's just the difference there. So how to make money from Forex? You make money from Forex by either buying or selling the currency pair. Sorry for that noise. If you feel the market is going to go up, you buy. If you feel it's going to go down, you sell. That's just about this class now. So I'll be ending this class and I'll be talking more on leverage and spread and loss size, how it works, before we can now start doing example on all those things. So see you guys in the next class.